G'day and welcome to the Global View. I'm Andrew Gagan. Thanks for joining us on the show today as we get this week underway. Well, let's first get to what we saw on global markets. Now, news, of course, dominated by what we're seeing out of the States, with more volatility expected on global markets after President Trump slapped a new 10% tariff on all imports to the US and upped that to 15% following US Supreme Court ruling striking down his tariff regime. US stocks advancing on Friday in response. For the week, the S&P rose 1%, the Nasdaq 1.5% higher, and the Dow edging up 0.25%. Now, in Friday's trade, Alphabet, Amazon, and Apple were among the best performing mega caps. Shares of the US retailers jumped after the Supreme Court ruling, providing a relief to those businesses, which took a major hit owing to tariff-related costs such as sportswear and apparel companies Nike, Under Armour, and Crocs, among other stocks seen as benefiting with toy maker Hasbro, online furniture retailer Wayfair, and pottery barn owner Williams-Sonoma. And Akamai Technologies, those shares slumped after the cloud company forecast first quarter adjusted profit below estimates that saw shares in CrowdStrike and Oracle suffer. And among the companies reporting this week, AI bellwether Nvidia, a big one, as well as software players Salesforce and Intuit, and AI infrastructure players Dell and CoreWeave. Well, the US Supreme Court has struck down President Trump's sweeping tariffs deemed illegal because he pursued them under a law meant for use in national emergencies. The president responding within hours of the ruling on Friday, slapping a new 10% tariff on all imports and ordering new trade investigations that could lead to additional levies in months. And then, less than 24 hours later, he raised the rate to 15%, the maximum level allowed under the law. And in the latest US data, fourth quarter GDP came in at an annualised rate of 1.4%. That was softer than expected. December personal income and spending rose 0.3% and 0.4% respectively, while core PCE inflation rose 3% year on year. Manufacturing and services PMIs both fell. US Treasury yields rose following the US Supreme Court ruling. The US 2-year rising at 3.48%. The 10-year was up at 4.08. Australian 3-year government bond yields at around 4.3. The 10-year at 4.75%. And the US dollar index closed down slightly on Friday. The Aussie is trading at 70.8 US cents. Well, President Trump says he is considering a limited military strike on Iran, dialing up the pressure on the regime to make a deal over its nuclear program. Brent crude prices rising in response, those at $72 a barrel. Gold rose on the weakened expected US GDP data, expected volatility around the US tariffs, and that geopolitical risk. Spot gold up some 2% at $5,100 an ounce. Copper also up around 2%. Bitcoin trading below 68,000 US dollars. All right, let's get across all those global market moves and developments. We're joined by Greg Smith from Generate KiwiSaver. Greg, happy Monday to you. First off, of course, we're looking for a market response to what we've heard from Donald Trump. How have you opened there?
We've opened 0.5% higher, so that's good news. Interesting, really. As you mentioned, Trump was pretty quick to come back with the 10% global tariff, and then he raised it to 15%. So 10%, New Zealand, we were looking a bit better in terms of our exporters, but our tariff rate, as opposed to Australia, is 15%. So it's probably a bit of a net neutral from that perspective. So the initial sort of optimism sort of faded there. But what we have had today, which is quite significant, is, and I suppose it's related to the US, is our biggest company, Fish and Paykel Healthcare, have come through with an upgrade to their earnings. So they had said 2.17 to 2.27 billion in terms of operating revenue. That's been upgraded 2.3 billion, and operating profit as well, upgraded to a range of 450 to 470 million, and that was 410 to 460. They said tariffs, they're still working out what it all means and the impact to them, and I guess it's probably the same for a lot of investors, isn't it? We've got obviously the 15% global tariff, and then there's still tariffs on some other goods, and then it's 150 days. It can only be temporary. So how does it all play out remains to be seen. So they're still digesting that, but they are benefiting from a lower Kiwi dollar against the US. And our currency has been pretty weak generally. Actually, we're down to around 84 cents against the Aussie dollar, and that's proving a bit of a tailwind for them. So that stock, biggest in the market, it counts around about 15% of our index. That's up almost 5% at the moment. So, yeah, net neutral in terms of the overall impact, but positive result there for FPH.
All right. Greg, we'll come back to the tariff implications in just a moment. Just continuing with what we're seeing results, any other companies you got your eye on at the moment there?
Yeah, there's a couple of decent results out this morning. We've had a bit of a mixed start to the earnings season, so companies facing the economy, some are doing okay, some are pushing out the recovery timeline a bit. We've got Chorus, which is telco infrastructure, so quite defensive. They're doing okay. They've been lifted by rising fibre connections, so we're at around about 72% in terms of fibre uptake, so the copper wires are going. But what is quite an interesting one this morning, Andrew, is that we've got another gentail or another electricity company raising capital to sort of fund generation and fund in particular renewable generation. So we've got Genesis Energy, they're planning to raise 400 million. They've come in with a record result, but at the bottom line, so 307 million there. But yeah, more capital being raised. It'll be interesting to see how this goes, because the Contact already got in there last week, and you saw a lot of the gentailers weaken in response to the need to support that capital raise. And now we've got another one. So I suppose Contact sort of had the first sort of mover advantage, and now Genesis is coming out as well. So I'm interested to see how that is supported. The government, unlike Contact, owns 51% of Genesis, so they will be supporting that raise.
So, Greg, when we look at the global implications of what we've seen out of the States, obviously, as you mentioned there, so Trump responding 10%, now he's gone 15%. As you point out, that's where you were in New Zealand anyway, as far as what you've been hit with. Certainly higher here in Australia, because we were at 10%. More globally, though, are you expecting this is going to add to market volatility?
Oh, I think it should be received positively. Obviously, it's still very much an evolving landscape, isn't it? But I think US trade policy has certainly been given a black eye, if you like, on Friday, and really interesting given that some of obviously the judges were ones that Donald Trump put there, and that probably made him even more sort of peeved by the outcome. So I think it basically sends a message, albeit it's sort of almost a year after the fact, after that Liberation Day board, not quite a year, but coming up to that, trade policy can't be decided by tweets or by sort of social media musing. So I think that does send quite a strong message. I think ultimately the market should respond positively to that. I think it'll be fascinating to see how that meeting between Trump and his Chinese counterpart goes, and what it means for all the trade deals that have been agreed. So again, we've got a bit more uncertainty, but we have got some certainty in a way that the Supreme Court is not going to just roll over. So whole lots of other issues, are those tariffs going to be returned? That's going to be, the Supreme Court made no comment on that, so that's a matter for lower courts. That could take years. But I think the most helpful thing that I see, perhaps medium term, is, and given that inflation print, which you mentioned, came in quite relatively high in the US on Friday, is that it should take any of that upcoming tariff inflation, if there was going to be that, and bear in mind a lot of, I suppose, it has been borne by importers today, and should that take that out of the equation. So I think, ironically, even though Trump won't like the decision, it might actually be quite helpful to him as he sort of heads in towards the midterms and be able to get rates, well, not prod the Fed, should I say, into getting rates down lower. So if we can take some heat out of the inflation, and bear in mind, given that pretty soft GDP result we had, albeit impacted by the shutdown on Friday.
Yeah, bear in mind, of course, we know how capricious he is, so who knows where this is heading ultimately. Greg, just before I leave you to look, locally here, we've got a key read on inflation coming up midweek. What are you seeing in New Zealand as far as inflation is concerned? Because there clearly is some concern that the RBNZ initially hiked too much, and now perhaps it's cut too much. How's that likely to play out?
Yeah, it's fascinating. So our economy is sort of Certainly still lagging yours. We're seeing green shoots. That's the cliche we're going to have to continue running with. But look, they're not prominent and they're not necessarily broad-based just yet. We've seen, and it's from a low base. So parts of our economy are still quite weak. The housing market, yours is, by all accounts, off to the races. We're certainly pushing along the bottom. In fact, I think the activity that I read last week was housing activity was down sort of 4.5% on the prior year. So the housing market's still quite soft. The results coming through the earnings season, you've got companies like Freightways saying things are good. Companies like Fletcher Building saying the recovery is another year or so off. Spark, it's a mobile provider that's struggling, or saying there's still headwinds. Likewise, a casino operator, Sky City. So I think, we're early stage of our recovery. I think a lot of banks here got ahead of themselves and saying the RBNZ is going to raise rates before our election. It ain't going to happen. And albeit that there's obviously independence between the central bank and government, it's not going to happen before the election. And the RBNZ, I feel, put a lot of economists and banks here in their box last week. The new governor came out and said, look, you're getting a bit ahead of yourself. We might see a rate hike in December, or it might be January. So I thought there was a really strong message sent last week, and I think that bodes well, because recovery, it's starting to happen, but it doesn't need to be stamped out before it even begun. So I thought that was really, really positive, and perhaps we'll add a little bit of oomph hopefully to our own stock market in the coming weeks and months.
Greg, great to get across what you're seeing globally, and also with a focus there clearly on New Zealand. Thanks so much for joining us from Generate.
My pleasure. Have a great day.
You too. All right, let's check how this day is likely to pan out then. Look, SPI futures are up. We shall wait, though, just to see what that reaction is, particularly in relation to Trump's new tariff regime. Lots of companies to get across to the final official week of reporting season. We'll get into that in just a moment with the Open.